Uranium friends, checking in on the ETFs, URA, Urnm, Urnj, and NUKZ. So we're going to start it off on the monthly charts because we are coming into important levels, right? So URA, monthly chart, you know, from a distance looks okay, right? But I've been tweeting this for the past couple of weeks. Don't want to lose this double bottom, right? Which is what are the numbers here? 28. I'm sorry. What am I looking at? 2279, 2289. All right. So now it's really a triple bottom, right? So, and these levels here are coinciding with these highs here. Okay. So it's all, if I wanted to take like, just shoot this line across just so you can see what it looks like, right? Um, it's the zone. This is the zone. So we don't want to lose this zone because otherwise you're starting to look down here, right? And then we have to see if it's going to test 18 and then not hold that. So that's kind of where we're at on the monthly of URA. Now, you all know I like URA the best. I think it's the best gauge of the sector. It's the one that has the most liquidity. It has the most option chains. It's where the institutional money will come in if they want to come in. So to me, it's the most important spot. As we know, we lost trend. Um, January of 24, maybe, really. It's kind of around there, right? We've talked about it many, many times. So there's going to be a lot of work to do to start getting back, legging up again. But even if you take a look at this quarterly chart, right? So every candle is 3 months. It's still just looking for a higher low. So, now that this level, essentially it's still holding, right? But if it doesn't hold, you have to just start looking down at this 18 area, right? But we're in the zone where most of the trading, the buying and selling has occurred on this name since October of 2010, right? So the past 15 years of trading are being represented here. And the real truth is, it's like in the middle of that range, a little bit, so maybe in the the bottom 40%, maybe, right? So it's kind of in the middle of the range. The problem is, this is your point of control right here, up at like $28, and it's trading below it, and it keeps getting rejected there. So we'll see. Most important thing right now is obviously that we have a monthly triple bottom. We want that to hold. There is an old adage in the stock trading world, investing world, that there's no such thing as triple bottoms or triple tops. It remains to be seen, right? So it as is at a key inflection point. Now, if I look at the daily here, yuck, I hate when it's because I'm on my quad thing. Let's get to it, please. Thank you. We look at the daily here, and we're in historical oversold conditions. We've gotten a bounce there. There is a decent amount of volume profile, possibly holding it up as support here. All these are good. You do have this trading range down here from the summer of 2023. Possibly could visit it and act as support. So, even for the short term right now, I'm kind of expecting some sort of decent bounce, and I don't know what it's going to be. Is this the bounce we've gotten already? Right. So I don't know. Okay, so we do have a little bit of an RSI divergence, and you're starting to see this 5 EMA on the daily curl up. All right, so it's the first little signs. In my opinion, nothing actionable. Anybody who's aggressive as a bull right now, they're obviously working off this key level, this 2275, whatever, right in that range, 2250. That's the range that that aggressive bulls are working off of, and it hasn't achieved trend change yet, but it's gotten a little bit of a bounce, so we'll see. That is URA um, in a nutshell. So let's take a look at Urnm, see what we catch here. So little bit different. It's already gone through that monthly double bottom that URA is holding, and it's following through on that break. So yes, we are looking down here as potential support zones. Everything, monthly downtrend confirming with follow through, breaking the key monthly level with follow through. Starting to come into testing this support area where there's a lot of volume that should, hopefully act as support. But you can see even with URA this consolidation area, which URA has not come close to visiting yet. Urnm has, and it's interesting to see uh, more retail shakeout, right? So URA, even for me, URA is a hold. I'll trade URNM. I'll trade URNJ. URA for me is much more of a hold. So that's kind of the way I'm playing these ETFs. But we're coming into this big volume node point of control. It's just got to hold it, and right now it is holding it, but it's shaky. So we'll see. And this daily, what's the daily look like? Just hovering around in this oversold conditions. Not much of a bounce. 12 EMA is just acting as the resistance guide. So, bears are probably saying, okay, anytime I get a tap to this 12 EMA, I'm probably going to short it. And after that, I'm going to short it at this blue line, right? So that's just kind of how it works, unfortunately, right? So you have a little baby bull flag going on here, but it doesn't say much. I don't see anything as actionable. Again, if aggressive bulls are working off this really what is this daily triple bottom, it's low risk. It's a $2 risk, basically $1.50 risk. So there's room for there's cases to be made for the bulls and the bears in this entire sector right now. Okay, um, the bears have been feasting for a very long time, and it should be the time for the bulls to step in, but macro is probably keeping a lot of people away, right? So you do have to keep that in mind, regardless of what you think this great supply demand imbalance and fundamentals are, and blah blah blah. That doesn't mean money's coming in because everybody's trying to be conservative and be in cash. And then if you do get some sort of major market rollover, well, I'd rather put my money into the S&P 500, honestly, than uranium. So I'm sure a lot of people think the same way. I, of course, have enough room to do both, but not everybody does. So, would you rather buy Amazon or Nvidia, or would you rather buy URNM? So you have to keep those thought processes in mind for just the normal Joe Schmo out there. URNJ, I mean, complete round trip from its debut, blasted through this lower value area. So there's a case to be made that the value area is getting picked up here. So when URNJ came out, these were great buys. Maybe this is going to be the case again. So it is holding these lows of 1350, 1360, whatever. It is holding that stuff. So we'll see. The juniors, to me, I'd rather catch these guys on a laggard run, but the very similar look to URNM on the daily and very oversold. Makes sense that there's a bounce. It's just what type of bounce is it going to be? So you can see by these monthlies that things do not look great, especially for URNJ. So the only thing I could say is that it's holding this level, and it's a low risk spot for the bulls. There's no question. There's no question this is a low risk spot for the bulls. You break these levels here, and it's black dirt breakdown, and anything can happen. So I would just be aware of that fact. NUKZ, another deal with a very young fund, but holding up much better. Okay, and this is your SMR and your Oklo and all those other big board exchange traded names, and much safer than a lot of these mining things. But let's take a look at the weekly, and the weekly has lost its key support level. Also, it's kind of back testing now. But what I would say, just from looking at this chart right now, I would try to be aware of the possibility of a weekly head and shoulders forming on the next bounce, reeling everybody in to smack them down again into distribution, right? So be aware of that dynamic with nukes on the weekly chart. For now, uh, it's back testing its breakdown level, and we have to see where it goes from there. The daily has changed the trend, and what do I mean by that? Which, if you listen to me enough, you know. The daily has changed the trend: low, high, higher low, good pivot, higher high. This is a trend change with no follow through at the moment. That's what it's called. So we have to see what follow through looks like here. But 12 EMA becoming the guide as resistance right now. But some hopes and dreams here, right? So a little bit of a daily trend change, and you're probably going to see that in the names like SMR and OKLO and NNE and LEU and all that stuff, because they have some decent performance this week. But that's the deal. There's um, NLR, which is another ETF. This is seeing a daily trend change as well, and a little bit more follow through. Um, so keep an eye on that, because maybe this bad boy is leading the charge for the rest of these guys to come in. You also have to look at the constituents, right? So there's more. Look at what's in here, and that could be the reason for the bounce. Maybe they do have SMR in here. Maybe they do have OKLO. So it pays to look at that sort of stuff, because guess what? If they've got some overlap with nukes, they're both doing a little bit better than the mining concentrated ETFs. Well, you know where to put your money, right? So, and there's another one that's just come on the scene. Not much in the way of it yet, but this Wisdom Tree is doing a Nclr. So it would yet another ETF, which is good for fund flows, but in both directions, right? So keep an eye on the ETFs, and we'll do some individual names and the physical shares, the physical proxies in the next video. Devil over and out.